hi everyone. Hope everyone's doing well. I'm really excited to be with Andrew Johns with us today and hearing a little bit of his insight. I've been really lucky to know Andrew and his family for many, many years now. Andrew is the lead advisor for cash management with the company Canaccord Genuity. Very successful, but been doing this for what, over 20 years now?
Yeah, 21 years in May, yeah, for sure.
Nice, nice. Time flies, right?
And thanks for having me, Mike. This is exciting.
Yeah, you're very welcome. Thank you, Andrew. We know you're really busy, and this is probably one of the busiest times of the year for you. So, with all of this crazy stuff going on, so really appreciate the time. Thank you.
Yeah, you're welcome.
Andrew, why don't you tell us a little bit about yourself?
Sure. Yeah. For those who are listening, thanks for coining in. Mike and I go back a number of years. Mike sold us our first house, and we love working with the guy. So you're in good hands with Mike Rampf. Myself, I work at Canaccord Genuity, as Mike alluded to. I run a group here called the Cash Management Group. I'm an entrepreneur. I have another business, cryptocurrency business called Honey Badger. So we're one of Canada's largest Bitcoin kiosk operators, and we're across Canada. And yeah, I grew up on Vancouver Island, but I was born here in Vancouver, and I've lived here in Vancouver for the last roughly about 20 years. And myself and my wife Crystal, and we have 3 kids: Caprice, Chanel, and Sterling. So 2 girls and a boy. Ages 8, 6, and 4.
Lovely.
And yeah, so there's a little background on myself and my personal life. Yeah.
Nice. Andrew has been very, very, very successful. He's managing over $2.5 billion worth of cash. So this guy really knows what he's doing about. So we're lucky to have him on the phone right now. Andrew, we're in the middle of a very interesting time with COVID-19. It's April, what's today? April 15th. The government has implemented a bunch of policies that are helping us in this very strange environment to help us get through to hopefully the end of this pandemic. What are some of the policies that you see, and how would you benefit from them?
Sure. So I definitely encourage anybody who's listening to this especially for business owners, to go to the Government of Canada website. The provinces also have programs in place, but they really kind of pale in comparison to what the Government of Canada is doing. So if you go to the Government of Canada website, they have a section called the Coronavirus Disease section, and they have a section in there called Canada's Response. And then from there, you can select on, I'm just looking at right now, they have support for individuals, support for businesses, and support for industries. So you're going to want to look at the support for businesses probably, because I'm assuming that if you're working with Mike, you probably didn't lose a job and you're looking to get your $2,000 a month. You're probably running a business and probably have some real concerns there. There is a lot of programs, and these programs are kind of in play and changing as we speak. It's quite fascinating to me. You'll get a bit of a sense of my political view on this as we go into it. But it seems as though the programs continue to change as more and more Canadians complain and put their hand out and say, I want some too. And I'm concerned about the long-term effects, but short-term, as an advisor, I'm definitely advising my clients to, put their hand out, take what they can, especially because most of the people I work with are high tax income paying individuals, and those people are going to be the same people who are going to be paying for this many years down the road.
Yeah.
So Mike, do you want to go through some of the specifics that are being available to businesses right now?
Well, there's the one about the 75% assistance for income if you're paying over, I think last year, if you paid over $50,000 and less than $1 million, you get 75% subsidy.
Yeah.
A question for you would be, so would you consider continue to hire your staff, you pay them their normal salary, you apply for this program, and then do you get 75% back from the government of the salary that you paid?
Not exactly, and this is where the devil is in the details. So it sounds really good from the surface, but there's a number of, first of all, hurdles that you have to overcome or markers that you have to meet to be able to qualify for in the first place. So, and that's where, again, this has been changing. So initially when this came out, basically government said you had to have a 30% decline in top line revenues between March of 2019 and March of 2020 in order to qualify. And so if you didn't have that 30% decline, you wouldn't qualify. And the second thing they were going to do is they were only going to offer a 25% subsidy, and then they changed both dramatically. So the first one wasn't such a dramatic change, but they did say that they were going to adjust it from 30% to 15% for the month of March. So they've got 3 periods as they describe. I've gone through the entire act itself that got passed through Parliament on the weekend, so I know it quite well. So there's three periods they call it. I'm just going to call it March, April, and May. So your business has to have a more than equal to or more than a 15% top line decline, either from, and it's taking your March 2020 revenue, and it has to have a minimum of 15% decline between March of 2019 and 2020, or the average of your revenues for January and February of 2020 versus March of 2020. Okay, so that's the first hurdle you have to overcome. Yes. And then for April and May, that decline has to be greater than 30% in order to continue to qualify. So if I look at my own business, for example, we didn't qualify in the month of March because we didn't have a 15%. We had basically flat because we weren't really affected by this crisis until the latter half of March, like the last week of March. No question we're going to qualify for April and May. So you can't really apply until it's actually affected you. So we're only in the middle of May, or middle of April, so we can't apply yet. To the best of our knowledge. The second part that changed, the bigger part, was going from a 25% subsidy to a 75% subsidy. So this is by no question, even at 25%, but no question at 75%, every business owner should be looking at this. And the other part of this equation is the 75% subsidy does have a cap. So you couldn't just pay an employee $100,000 and then get a wage subsidy of $75,000. So what they've decided to do is they've capped it based on an annual income around $58,000. So it works out to about $850 per week. So if any of your employees that work for you are earning an annual salary less than $58,000, then you get the full 75% wage subsidy. But if you have any employees that are earning $60,000 or $70,000 or more, it's 75% of this roughly $58,000. And the program only is planned to go on for, I think it's 12 weeks. So the best case scenario would be a company that has a minimum of a 15% decline in revenue in the month of March of 2020 compared to the previous March of 2019, or of the average revenue from your January and February of 2020, followed by 2 more months of further declines that are 30% or more than those previous periods, and that your employees, regardless of whether they earn more or less than $58,000 a year, would all then qualify for this wage subsidy. So in one of my 2 businesses, like I said, we'll qualify in April, and all 5 employees will be able to qualify. Okay. I don't know if that helps give you a bit of an overview. No. And by the way, I should point out that this is, of course, taxable income. So this is not free money. So you will be taxed, and I believe the way that it's going to be taxed is though it's earned revenue for your business. So using some simple math, if you have, say, 10 employees, each earning, you're receiving, you have 10 employees and you're receiving $847 per week per employee, and you utilize this program to its full length, which is 12 weeks, you're going to have about $101,000 given to you by the federal government. That will be taxable income. But if you're in a small business corp, your tax rate's 15%. The hit for you on an after-tax basis is going to be pretty minor.
Yeah, that's good information to know. Okay, so that's the 75% subsidy. There's also a $40,000 line of credit of free interest for 2 years. Can you tell us a little bit more about that?
Yeah, and maybe before I do, Mike, let me just also mention to everyone that there is also a temporary wage subsidy program of 10%. And it says here the temporary 10% wage subsidy is a 3-month measure that will allow eligible employers to reduce the amount of payroll deduction required to remit to CRA. So this is something that our business that didn't qualify for the Canada Emergency Wage Subsidy, so the CEWS, will qualify for this one. And so this means that basically we will pay 10% less in remitted payments to CRA. So there is another program there. It's not as lucrative as the Canada Emergency Wage Subsidy, but one worth looking at.
That's a good idea. And you can do both.
I think if you qualify for the Canada Emergency Wage Subsidy, then you don't qualify for the other one. So we're going to qualify for the temporary 10% wage subsidy for the first month because we didn't qualify for the emergency wage subsidy. And then with the emergency wage subsidy for the months of April and May, we will then not receive the 10%. So you wouldn't be able to get like 85%. It's one or the other.
Okay, that's good.
To the best of my knowledge. There's also another couple programs. So they have this work sharing program. Not sure what that one's all about. You can look into that. But the other one that's interesting is if you are planning on hiring students, we're going to be hiring a student this year. They have a program where they're going to provide a sort of a subsidy for hiring students in British Columbia. I worked out the number and it basically comes to about $7.50 an hour. So if you hire a student to work for the summer through this Canada Summer Jobs Program, because you have to apply for this. I'm sure you'll get approved. They will basically pay. I think it's 100% of the. It's 50% of the minimum wage. That's where I got the $7.50 roughly. So if you pay your Canada student, your student here in BC minimum wage or $20 an hour, you're going to get $7.50 paid back to you by the Government of Canada.
Interesting. Okay, that's good to know. That's going to help a lot of students over the summer.
Let's jump to the to that loan program. It's called the Canada Emergency Business Account. Now, I know about this one quite well too because my business qualified. In fact, I filled out my application last night, and apparently I'm going to get my funding in 5 days. This is something that, depending on whether you're working with a big six bank or you're working with a credit union, you're going to get mixed response on where this program's at. You know, I talked to a couple of the credit unions we work with, and they're completely in the dark as how the program's going to unfold, be rolled out, what the application terms are. They really don't seem to have much idea. And by contrast, I used one of the big five banks. I won't name which one, but I used it on our online application, and we're actually able to do it last night in like 5 minutes. And apparently, we're getting funding for this. So it's $40,000. Every single business owner should consider this. The parameters around this one is that you have to have had at least $50,000 in payroll for 2019 and upwards of $1 million. So if you paid more than $1 million in payroll, you wouldn't qualify. And if you had less than $50,000, you wouldn't qualify. Now, unfortunately, what a lot of business owners are starting to realize, and this is my sort of being a little bit critical of business owners out there who've tried to skirt the tax system for years, where they, are maybe a self-employed individual and they pay themselves dividends, or they don't pay a lot of tax because they keep everything harbored in their corporation, and then they run their family expenses through the corporation and they don't pay themselves. Well, the problem is this: if you didn't pay yourself or any of your employees, so if you had your employees working as general contractors and they weren't paid anything, and you don't have at least $50,000 in payroll, you won't qualify for this program. And it's a pretty incentivized program. So basically, you can borrow up to $40,000. This is an interest-free loan. It's payable on December 31st of 2022. If you pay back 75% of the loan by December 31st of 2022, the government will basically rescind or write off or forgive the other 25%. So in my view, even if you don't need the money, you go get it. I mean, if the government's willing to give you an interest-free loan for $40,000, and in 2.5 years, you can give back 30 of the $40,000 and keep 10. I mean, I don't know why you wouldn't do this. Yeah. So it's definitely worth pursuing if you have that, if you fit those criteria.
Yeah, that's great. And then what you do with that, it's a nice little buffer, that 40 grand. Do something smart with it.
Yeah, pay down debt or have it sitting in a tax-free savings account. I don't know. I mean, as a corporate account, so I guess you wouldn't be able to do that, but you can invest it. You can, or you could use it how the government, I think, is supposed to imply that you're going to use it for the business itself. But again, the parameters are pretty minor. So here's the problem with these programs, both these business programs and the ones for individuals. The limits, the test to get in are so low that basically everybody's going to qualify. And if everybody qualifies, there's a lot of money that's going to get printed. And if a lot of money is being printed by the federal government, there is someone who has to pay for that at some point. You know, you think about like the number of business owners out there that are innovative, they're creative, they're hustling every day trying to, you know, make a buck and keep their business afloat and, you know, put food on the table for their families. They're going to all apply for this program. They're probably all going to qualify. You take the number of small businesses out there that do between $50,000 to $1 million a year in payroll, and you multiply that by $40,000, and those people all know that if they pay back 2/3 of that loan by December 31st, 2022, that they'll actually have a quarter of that loan rescinded. I mean, that's a lot of free money being passed out right now, and someone's going to have to pay for that later on.
Yeah, that's quite scary. Yeah,
get ready, folks, because the tax bill is coming. It's going to be delayed, but it's coming.
Oh, it has to. It has to. I think that even our kids are going to be affected by it in the future. Now, touching on this, what is your vision of the economic forecast?
Well, the one thing I do agree with what the Bank of Canada came out with today, Mike, is that they basically threw out all their models. They said they're not putting any models in their current report, or they're not going to put any models in any reports until October, because they just don't have any clue as to what things are going to look like. One of the things I learned from the financial crisis is that even the most articulate, well-educated individuals had no damn clue about what was going to go on, what was going on, and what was going to happen, and couldn't predict it. So, you know, you watch movies like The Big Short, and maybe there was the odd person out there that got really smart and had some inside scoop or had a good hunch. But for every one of those, there was a lot of people who claimed to be intelligent and just got slapped during that financial crisis. So as far as the outlook is concerned, I'm taking the approach of this, and this is the advice I'm giving to my clients. And this is the same advice for both my private wealth clients as well as my institutional clients. The advice is simple. You got to look at your own house first, especially if you're a private individual. Take a look at your spending habits. Make sure you cut those back. Prepare for a very negative environment. There's nothing wrong with foregoing more frivolous expenses for the next 6 months. It's not going to make your life worse. In fact, it might feel good in doing that for yourself, and really pare back on your spending habits. Because even if you are well employed right now, even if you have a business that is doing well, maybe even thriving in this market, it could change. It could change very quickly. And if things do get really bad, maybe you even have a really, business is doing decent, but then all of a sudden the tax bills start coming in from all this spending, and it's going to go to the people who are earning the most. And we're already at a 53.5% marginal tax rate here in Canada, in BC, that just got changed here recently. So with this NDP provincial government and then this Liberal government, I don't think they're going to hold back on taxing Canadians more when they need to. So as far as the future is concerned, there's all sorts of scenarios. I have no idea. I can't control what's going to happen, but what I can do as an individual is control my own spending activity. As far as an investing side is concerned, there's going to be some phenomenal opportunities. I've already started deploying some of my own personal cash into the equity markets. I think there's phenomenal value in the big blue chip names out there, both in the U.S. markets and Canadian markets. I like the big five banks. We have this love-hate relationship with the banks. Look, I compete against these big five banks all day long in my own job, but I also own their shares in my RSP account because the dividend yields are phenomenal. Like right now, if I take a look, the market had a bit of a sell-off today, but if I take a look at some of the big banks, Canadian Imperial Bank of Commerce, and I'm not making any recommendations here, so for proper disclosure, this can't be taken as financial advice. You need to actually talk to a professional about this. But just to give you a highlight, CIBC currently has a dividend yield of 7.23%. The lowest dividend yield is with Royal Bank, largest company in Canada. And Royal Bank, just to give you a contrast, Royal Bank is got a market cap of $125 billion. CIBC is the fifth largest bank. It's at $37 billion. A lot of people don't realize that if Bank of Montreal, CIBC, and National Bank all merged, they'd still be smaller than Royal Bank. So people talk about the big five banks thinking they're all the same, but they're not. Royal's huge. You can get a 5% dividend yield on Royal Bank. These banks have never missed a dividend payment in their entire career, in their entire history. Wow. OSFI, who's their regulator, has recently requested or asked the banks not to raise their dividends. I think we're going to see with the big banks is they're going to start to, the bank earnings just started happening today. it was Morgan Stanley or Bank of America that just came out with their first, they're one of the first to come out in the market with their earnings release. And they're going to take all their bad loans or potentially bad loans, and they're going to throw them in this quarter and really make this quarter look terrible. There's two reasons for that, in my opinion. Three reasons, actually. One is that investors don't care. Like, everybody's expecting the news to be bad. So if it's shitty, really shitty, or super shitty, it doesn't matter. Everybody's expecting it to be really bad. So you might as well throw all the bad stuff in now when you've got the opportunity. The second reason is then you can turn to the central bank, you can turn to the federal government as the Royal Bank of Canada or CIBC and go, guys, we need more of your help. Look how bad our quarter was. The third reason is when people start to pay attention to bank earnings again, say late 2020 or next year in 2021 or 2022, and some of these potentially bad loans that are kind of on the border but probably are going to be good, and the bank writes them off now, what happens is you got a guy like Mike Rampf, and he's kind of not been great on making his payments, but he'll get through it. They throw you in as a bad loan today, and then a year from now, when you start making your regular payments again and you be a good customer like you always have been, they come back out and they say, oh, you know what, this loan actually, it actually turned out to be a good loan, and they put that back on their earnings release for that quarter, and all of a sudden their earnings look really good a year from now. So those are the three reasons why I think you're going to see these banks doing this, and I think these bank share prices are really good value right now. And then there's lots of other names. I won't go to all of them because I want to be in context of time. I want to give you some other questions to answer, but definitely there's some investment opportunities for sure.
Well, that's actually leading into my last question is, if you've got some cash sitting around, what would you be doing with it right now? So you kind of started touching.
Well, look, I guess going back to my first piece of advice, I mean, this is just generic advice because everybody has an individual situation, and you can't really give good advice unless you know all those details. It's kind of like, I use the analogy of going to see a doctor and telling them you have a pain in your stomach, and they give you some medicine without asking you any questions. I mean, a doctor would just, a good doctor would never do that. But if I want to just sort of speak in generalities, first of all, if you have a big debt load, despite how low borrowing costs have now become with the dropping rates by the Bank of Canada, get your financial house in order and pay off your debt. You can always go back and leverage up later, but I think this is not the time to be strapping on a ton of debt unless you have the stomach to handle that. Next up would be then taking a look at your own world. I mean, a lot of the people I work with are business owners, and they're keeping their powder dry. They're keeping a lot of cash on the sidelines because while they love the idea of I've just given of using some of your capital to buy some bank stocks, they're also seeing in their own world, whatever industry they're in, their competitors who are going to likely go out of business, one or two of them, and maybe they can pick up those businesses, for 50 cents on the dollar. Maybe they can buy some of the equipment at 70 cents on the dollar. I mean, there's going to be some real asset sales going on. In your world, Mike, the Bank of Canada talks about how it thinks that the real estate market will, remain relatively robust. Low borrowing costs will help keep the real estate prices propped up. I don't have such a positive view on that. Here's my view. If people start losing their jobs, it doesn't matter how low the borrowing costs are. You can even get into negative borrowing costs because if the banks can't lend to you because you don't have an income, then you're going to walk away from your house. We already know of this going on in the States, not at the housing level, but the commercial property level. So I would be right now, I'd be very cautious about investing. I don't think right now is the time to get a ton of money invested. I like these equity plays because unlike buying real estate, you can get in and out of a stock very quickly with very little cost. So I do like that. Of course, I'm a bit biased because I work in the business. But if you want to consider other options like real estate, I would say keep your powder dry, be ready, talk to a guy like you to keep your finger on the pulse of what's out there, because I think some fire sales are definitely coming.
Yeah, it could be. Once you get to some financial distress, you lose your job, you're over leverage, you're going to be in trouble. We're going to see some big sales.
100%. Yeah, a lot of people keep thinking about, well, interest rates are low, so Canadians can carry this debt load, but you can only carry a debt load if you are actually employed, like if you actually have an income. If you don't have an income, how do you possibly cover that debt load?
Yeah, exactly. Well, listen, Andrew, this has been a very, very informative session. I really appreciate your time. It's super valuable. Thank you very much. We'll send everyone an invite to your website. And if anybody has any questions, maybe they can fire you or me an email. And good luck out there. This is a very exciting and interesting time for you, and good luck.
Thanks for having me, Mike. Yeah, appreciate it. Yeah, good luck with you and your all your customers as well. Thanks very much.
And hi to the family.
Yeah, same with yourself. Thank you.
Thanks, Andrew. All the best, man. Really appreciate
Thanks.
it. Thanks. Great.
No problem. See you soon. Bye-bye.